Well, good afternoon, everyone. Thank you for joining us this afternoon for this penultimate panel. I think we've spent the last couple of days hearing some great talks and presentations, so I'm expecting this to be no different. I'm really excited to introduce our fantastic panel here of Hartmut, Denitza, and Eva. Maybe we can kick off with intros, guys. Maybe start at the other end, actually. With Eva.
Sure. Thank you.
Okay.
Hi, everyone. My name is Eva Lawrence. I am the head of EMEA for Figment. Figment is the complete staking provider for institutions. So we help large institutions like VCs, hedge funds, exchanges, custodians implement a staking strategy, and that's non-custodial protocol staking. I come from a traditional finance background. I was at Morgan Stanley for 8.5 years in the securities lending trading space. And then I've been in the crypto space now for 4.5, 5 years, which is, I guess, a few in this world.
Absolutely.
Hi, everyone. My name is Denitza. I'm part of the BD team at Bullish. Bullish is an institutional regulated crypto exchange. What really sets it apart is the blended market structure. What we've basically done is taken all the traditional exchange elements and combined them with some of the most exciting innovation in DeFi, namely automated market makers. We launched the exchange in November 2021, and we've traded over 150 billion since, so it's been a stellar start. My background is also traditional finance. I also used to work at Morgan Stanley, but Eva and I did not know each other, unfortunately, back then. I used to cover equities, so I must say that covering Indian and Chinese equities trades pretty similarly to crypto. So it's been a smooth transition, let's say.
You've settled in easily.
Yeah, hi, my name is Hartmut Giesen. Thank you for having me here. I'm the business developer for Sutor Bank. Sutor Bank provides a banking platform for fintechs and cryptotechs. In the core, we provide a banking infrastructure for crypto business models, and as an addition, we also provide our license as some kind of umbrella for crypto business models. And yes, we are active in the space since 2016. I'm with Sutor Bank since 10 years, but I'm not a banker. Originally, I come from the technology marketing space.
Cool. Thanks, guys. So crypto at the crossroads, where next? Kind of a big question for the last session, and we don't actually have a huge amount of time, so we're going to do like a real quick fire debate here. I don't know about you guys, but it's been really cool being here. I was here last year. I'm told that attendance is double from last year. A lot of interesting people and companies here. What we see here seems to be the opposite of the mainstream narrative in the media, etc. And certainly at BCB, we see we're busier than ever, helping people with their payments and their FX. So it's kind of like this, where are we really and what's going to happen this year? But I feel like we can't start looking ahead until we just take a check on last year. So what do we think the lessons that we've learned are from last year? And do we think that we as an industry have really taken those on board? And maybe Denitza, could start with you.
Yeah, sure. There are actually so many lessons, but I'd focus on the ones that I think are the most important from our perspective as an exchange. I'd say the first lesson is that KYC and due diligence are your friends. They're not your enemies. As an industry right now, there's massive issues of trust, so we need to bring that trust back into crypto. Things like controlling and verifying your source of funds, understanding the business models of your clients and what they're planning to do with their accounts are just basics. The second lesson I would say is that you should verify and not trust. Even if you deal with big clients and big names, that does not mean that you don't have to undergo sound controls. For example, we do compliance screening on all the coins that come in and out of our wallets. We as an institution get independently audited by Deloitte. So just the basics really of traditional finance that we could be bringing into crypto. And the third, probably largest lesson is that fraud is fraud no matter the asset class. So fraud controls in institutions are essential. And it doesn't mean that because we've had fraudulent behavior in crypto, that needs to define the asset class. Fraud is fraud everywhere.
Exactly, and I think that a lot of the issues that have been brought up are not necessarily crypto specific, right? They are failings with internal managements of companies that need to be addressed properly, but also exist outside of crypto. Another key issue and a lesson that we've learned from it is around segregation of assets and separation of control. I think that's what a lot of companies should be focusing on. And again, that's not necessarily just crypto companies that should be focusing on that. These should be values underpinning most companies. You shouldn't be commingling assets. You shouldn't be the liquidity provider, hedge fund exchange, an auditor for the same company. You need to make sure that the focus is on that segregation and separation.
Yeah. Hartmut, interested in your viewpoint, given you're coming from the banking space, but Sutor as a bank has been operating in the crypto space for a little while. How does it look from your perspective, looking back and then thinking about how regulation is coming in this year and further downstream?
I think in general it's not so different from what you already said, meaning you have to do a proper due diligence concerning your partners, the token you trade on in your name as broker. What we see in the regulation space, I think we are moving from a more country focused regulation to a European-wide regulation. Some of the regulation makes the things more difficult, some more easier. We have the MiCA, we have the new AML directive. Both are European-wide. We have the new DLT pilot regime, which is not innovation or regulations that makes the things more difficult, but more easier to build new business models on blockchain based. So we are optimistic that the new regulation or the regulation which is ahead make Europe more to a unified market. Up to now, we have a more fragmented regulated landscape, and now we are going to a more unified regulated landscape, which is very, very good for Europe, I think, and for the business as well.
Yeah, and then maybe Eva and Denitza, from like where you guys are in the space, how are you seeing regulation play out? I mean, Eva, there's been things in the US around staking recently, and then what do you think that means for your space going forward?
Yeah, so I think that, the more clarity we get, the better. And so the SEC kind of passing, providing guidance is helpful in a way, but you have to obviously look at the facts, and that's very unique in that one instance to retail staking, and again, maybe a lack of separation. But I think here in Europe, we have the advantage that we are moving towards clarity, and I feel that Europe is in a position of strength because of that. I know that working with companies here in the region, that is something that their legal teams and their risk teams are focusing on, and they feel more comfortable with, that they have that some form of clarity here in Europe, and I hope that we continue with that momentum. I think that we need to lead with that, and then also from a UK perspective, hopefully, hopefully we manage to not stay behind there as well with the financial markets bill.
Yeah, I fully agree. Even from the conversations that I've had at this conference, you can clearly see that the tide has shifted and Europe's leading the way in regulation, interestingly. Just in terms of the companies that are relocating to Europe, in terms of the volumes, there's definitely a huge momentum. From our perspective, we were built and designed to be a regulated institution, so we welcome that. We welcome more clarity. The one thing I would add, though, given the recent events in the US and what we're seeing, it's really important to regulate innovation, but it's also important to innovate regulation rather than just ring-fencing a growing industry. It would be great if the regulator could start understanding the business models and work with the companies to protect everyone versus what we're currently seeing, unfortunately.
Great. One of the things I guess I particularly struggle with, I don't know, I'm sure others do, it's like we look at the news, we see what sort of is in the mainstream media, and trying to sort of distill fact from, you know, the hype or the like just stuff swirling around. What do we think about market health right now? And, you know, are there any things that particularly stand out in terms of what we're doing or what you guys are seeing? Maybe we can start with the health question with you, Denitza, and like, what does it look like from an exchange perspective?
Yeah, sure. So I think a leading indicator for sentiment is stable coin balances at very centralized exchanges. And unfortunately, after the SEC gave the Wells notice to Paxos, we've been seeing massive withdrawals. So in terms of sentiment, I would say it's rather bearish because it's an indicator of the readiness of capital to be deployed in the space. Then in terms of volumes, we're seeing a very different picture. We as an exchange are seeing record volumes from what I hear from other market participants as well. But at least I suppose what's good is that the interest in the industry continues and remains very, very high.
I think perhaps I can add, we track also our trading volume, and the December was the lowest month in 2 years, I think. But already in January, we see a rebound, a strong rebound of trading volume. And I think looking on the price development, I'm very optimistic that we will see perhaps the same trading volume as we saw it in the first half of the last year, in the second half of this year.
I think also the market's in almost a state of anticipation. There are lots of people working on great projects, building behind the scenes, and we've also got the Shanghai upgrade approaching. And I feel like a lot of institutions in particular are waiting in anticipation to see when that goes ahead, what the execute looks like, and then are very interested to see how that impacts ETH adoption across the market for the remainder of the year.
Cool. And are there any particular things that leap out? One of the things we see at BCB, I mean, similar sort of thing. January was a really busy month for us. A lot of companies wanting help from us from their payment services. We get to see a lot of cool companies and interesting projects. Anything that stands out for you guys or the things that you're working on? Perhaps Hartmut, start with you on that.
Yes, perhaps on one short explanation before. We have a similar deal flow as a venture capital fund, meaning we get requests from startups to cooperate with us, that we provide the banking infrastructure and our license. And what I can see in our deal flow, a shift from trading business models to tokenization business models, meaning a year before or 2 years before, the request was more or less out of the trading space, and now we get requests from companies that tokenize something, that tokenize real estate, tokenize collectibles, or also shares, like equities, and would like that we provide our banking infrastructure to build secondary markets and so on, because at the moment it's the biggest problem in the tokenization area, at least for now, to establish secondary markets. I think this shift, and I think this is for me it makes me optimistic, because I think these are more sustainable business models than only the trading hundreds of tokens that nobody knows what is the value behind these tokens.
From our perspective, I think what's really exciting is that the industry continues to build very robust and innovative products. So on the yield side, since it's been largely debated of late, currently investors in terms of volume have 3 ways to earn yield. It's either lending, staking, and another tool that has been added to the toolkit, something that we've been working on, is automated market makers. It's a way for people to deposit idle assets and earn income on them. Maybe Eva can elaborate a little bit more on staking, but essentially, I think the biggest takeaway from last year was also that diversification is really important. So with all these 3 products, you have various risks. You know, staking has protocol risk, lending has counterparty risk, AMMs have impermanent loss risk. But in terms of diversification, just provides various toolkits for investors to participate in this trend.
Yeah, and obviously we've seen that on our side in terms of the non-custodial protocol staking, where institutions are looking at delegating their proof of stake tokens for a return. We've also seen interest in liquid staking from the perspective of ETH. And then also kind of the data and reporting around those functions as well.
Cool, and I think the things that you guys just touched on there, personally for me, are some of the most exciting things. And we talk about our industry, you know, building this new financial system. You know, we talk about moving into this Web3, you know, world that we're in now. The area that for me that is really exciting still is DeFi. And you know, with all the things that encompasses, what do you think 2023 holds for DeFi, given looking back what's happened, and where do we think we're going in the future? Maybe Eva, you could kick off on that one.
I think now everyone's got to the point where they realized that there's not this DeFi versus CeFi concept, that the two can work interchangeably, and there is, you know, some form of a spectrum, as it were, in terms of DeFi. So I think projects that are bridging the gap between the two worlds, I think we'll see a growth of. And, you know, Web3 infrastructure in general is another area. And it's actually a shame that Joe from JP Morgan isn't here, because they recently put out a report on staking and how they expect to see the growth in Ethereum. So as I mentioned earlier, I really see that for me is the area with MEV, flashbots, and then institutional adoption in Ethereum staking that I think we're going to see take off and grow this year.
Yeah, I fully agree. I think the convergence of DeFi and CeFi is going to continue to be a very strong theme this year. We fully believe in that, which is why we've tried to bridge the best of TradFi with the best of DeFi, package it for institutions, wrap it in KYC, regulated, because still a lot of from the exchange's perspective, a lot of the hard lifting still happens on centralized exchanges. But in times of turbulence, DEXs do get a bit. So yeah, I think that's going to continue to be a very strong theme for this year as well.
Honestly, we are not in the DeFi space active right now, so perhaps I'm not the right expert to do some forecasting or something like this. But only my view, I think we have, I see Ethereum as the platform not so for DeFi, but for decentralized decentralized apps. Meaning, we see that. Let's take AI. I think we don't want that central players provide the big AI models. Then we have to think about what is the decentralized alternative to a central AI model, and then we are very quickly to a blockchain that can provide decentralized IT. I know this is not DeFi, but this is my view on where we could go with decentralization. That's the first point. The second point is DeFi. After FTX, I know you don't want to mention FTX.
Don't
I do it.
Certain names don't mention.
Yes, but only because DeFi, after FTX, DeFi should be the alternative for crypto trading or for crypto business. I think the FTX is not about CeFi versus DeFi. It's more regulated CeFi versus not regulated DeFi. And we are in a core, we are regulated CeFi. And I think there is still a future for regulated CeFi, which we would like to provide. Third, I think we will also see our first DeFi projects within Sutor Bank, meaning we will get requests to enable DeFi business models as well. I think we have also some regulation for DeFi, and we are prepared to provide our license umbrella also for this kind of business models.
Wonderful. So there's a big sign there saying time's up. I think we could have kept talking for a while.
Time's up for the panel, time's on for the drinks.
Absolutely. So thank you very much, everyone, for listening. Please, a big hand for our panelists.
Thank you.
Thank you, Chris.